All righty, folks. We are a couple of days away from what President Trump is calling Liberation Day. I believe it is on Wednesday, April 2nd. We had a very interesting Friday where the morning started at 5:30 a.m. Pacific before the market was open when inflation came in hot. The Fed's preferred inflation gauge, PCE core, came in hotter than expected, actually went up 2/10 in a single month. Not a good thing. Inflation is proving sticky. One might even say getting worse. Then we had a stock market that had a monster sell off of over 700 points. And surprise, surprise, bonds went significantly lower in rates. So bond values went
The
up, but
yield.
rates went lower, yields went lower.
Yeah.
So I do not know what is going on. I don't know if this was just a, get flat for the weekend, get out of risk. But the one and only Mr. Dan Bird is here to break it down for us. Dan, I'd love to hear what your thoughts are on Friday. Obviously, you were watching that or have gone back and looked at it. What did you think Friday? What is this supposed to tell us?
So I think a big part of it was PCE.
Okay. That certainly explains stocks to me, right? Higher inflation means rates higher for longer, potentially hurting earnings. We have tariffs, potentially hurting business earnings and multiples. So, frankly, a hot PCE and a stock sell-off made total sense to me. It was the bond collapse that was like, this is something different.
Can you see my screen?
I can, thank you.
That's the picture I had for my YouTube channel.
That's a good one. That's a good one.
Yep, it pushed him over. Um, Probably going to use this little guy, on Monday.
Do you think there's some follow through Monday?
Oh yeah, oh yeah, absolutely. Yeah, I
Absolutely.
think I think we're doing exactly what a bear market usually does.
Which is interesting because last week you said there might be a little bit of a rally, but there would be another, of my word, noticeable leg down. So is it
Right.
fair to say that the leg down has started?
Yes, we did get a little bit of a rally. I thought we might get more than we had, but we didn't.
Yep.
So yes, I think the leg down has started. Absolutely.
And do you think this gets meaningful? I think we ended Friday, down about 8% from the peak, I think.
Uh, that's probably about right, 8 or 9. I mean, I
Yeah, let's
know
call
I
it
know the total from the peak was 10, about 10 and a half,
at the
and we
worst.
didn't
Yeah.
and we did not get back to that low.
Right. So let's call it
Oh,
9%. So,
yeah.
uh,
Oh,
so you
probably.
do think this gets more meaningful, and could last a little while, right? Meaning weeks, if not months.
Yes. I think it probably will last till the end of the year.
Oh my goodness, that long.
Yeah.
So this is really going to be a repeat of 2022 on some level.
That's what I've been saying for a while. I
Right.
was saying that last fall that I
Yeah.
thought 25 would be a repeat of 22.
So
Yes.
if we rewind the clock to 2022, that was really a collapse in multiples, right? Because earnings went down a little bit in 22, but they were not horrendous. But it was the multiple collapse or multiple compression that really led to the drop. Do I remember that correctly?
Um, I, I would more say that the collapse in multiples was a result of the drop
Okay. Okay. All right. Fair.
because earnings weren't terrible, and
No, they
and I don't
weren't.
think I don't think they're going to be terrible. This, I mean, we've got earnings coming up starting next week or the week after.
Well, it's really funny you bring that up because I don't know if you saw this, but Lululemon reported Friday.
Yeah,
And again, they beat top line, beat bottom line, but they lowered guidance.
right.
I expect a lot of companies to do exactly that, right? They're gonna lower the bar so they can get over it easily. But boy, did Lululemon take it on the chin Friday.
Yeah, I mean that looks like where the whole market is headed, frankly, but huge volume too.
Yeah.
The volume right there, big gap down, continued selling off. Um, I mean, this is probably going back down here to the lows from last summer.
All right. So that's another, ooh, that's another like 25%.
Um, yeah, from 293 to 240, something like that.
Okay. All right. So
So that's
20%.
50 points.
Yeah.
So that's, yeah, that's 20%, 20%. Yeah.
Yeah. Ish. Yeah. Okay.
Mhm. Yeah, but
Oof.
I think the whole market could do that.
So, one of the things that you've been telling us for a while is when if you see this coming, you're going to use some of these triple inversion ETF negative,
Right.
whatever they're called. Is
Yeah.
it time for that, or are you still looking for validation?
No, it's time. And I mean, it might have been time right back here. Um, but let's go to for those interested, my website is breakpointtrading.net and my YouTube channel is right on here. So
Mhm.
if you want to tune in, I do this every day. So there's the link. Just go to breakpointtrading.net and just click on that link right there to get to the YouTube channel. But on the portfolios page is where I have my triple leveraged, actually single, double, and triple leveraged on here.
There you go.
So the SQQQ is for the NASDAQ. You can see it's moving up.
Mm,
So I like watching for a cross of the 21-day moving average, which was actually last Wednesday.
mm.
Might have been the time to get in. And then the Thursday, I got a green bar, and then Friday, it took off. So
Got it.
I started to get into a little bit of this, but I'm still expecting a rally because that was a big sell off on Friday. So there usually will be a relief rally
Mm.
after that. So we may get a relief rally. We might actually get a rally after April 2nd.
Yeah, that could be a sell the news, buy the rumor. Could
Yeah.
be.
Once all the uncertainty is settled.
Yeah. I listen to a lot of financial analysts. It's one of the rare times I went to CNBC and just kind of consumed, 90 minutes of, 5-minute content where they were talking to different analysts, and almost all of them were like, I'm doing nothing until Wednesday. It's like I don't
Right.
know what's coming. I'm gonna be flat. I'm not gonna hit. It's just like I'm out. It's too hard, too difficult, too chaotic. So you're right. It could be one of those buy the rumor, you know,
Yeah,
plays.
and it's true. It is difficult. Um, here's one that somebody asked me about this morning. Let me do it on this. Look at that. Talk about a difficult thing to trade or even invest in. This is Zscaler.
Yeah.
What the heck do you do with that?
Nothing. That- Unless
Go
you're a trade.
short at the top and buy at the bottom over and over again?
Yeah,
Rinse and repeat? I don't know.
yeah, one of the things I want to make sure I throw in here, there's when I think of stocks, these are my words, not yours. You can tweak them if you like. I think there's three people that kind of watch this. There are the investors, there are
Hmm.
the traders, and
Hmm.
there are the gamblers.
Yeah.
That's those are my three big buckets. And one of the things you have to do as an individual is know with certainty which one you are. Because I don't think
Right.
any of them are bad. But if you call yourself an investor, but you're truly acting like a gambler, you're going to get
Yeah.
crushed.
Right.
Yeah.
Yes, I would say I would, and there's a couple of levels of trader also. So you've got a swing trader who's
Hmm.
might be a from weeks to months time frame.
Sure. Sure.
Then you have a day trader who's literally
In and out.
daily moving in and out,
Yep.
looking at 10-minute charts. And again, there's nothing bad about either of those. You just have to understand what you are.
Yeah, you got to
Um,
know thyself. That's the thing I see with very successful investors. The more and more you and I do content, the more and more Taylor and I talk on Mondays
yeah.
is again, you could be a very successful gambler, but you got to know you're a gambler. Now you may call it something else because gambler has negative connotations, but you've got to know what you're doing. The worst thing you could do is be a gambler, but call yourself an investor, because
Yes.
that's a
Absolutely.
recipe for disaster.
Absolutely. And something that really brought this home to me was when I went to the Money Show and talked to John Carter,
Hmm.
who was an amazing um, options trader. And the thing that really brought it home was he said, I like to look for, when I get into a trade, I like to look for 8 to 10 bars to think about getting out, taking my profits,
Mm-hmm.
basically. And I thought, well, that's interesting. And since then, I've been starting to count the bars. And it's true, about 8 to 10 is where things run to, and then usually either go sideways or turn around.
Mm.
But what he said after that was even more enlightening. He said, so what that means is if you're using a daily chart, here's a daily chart, then you're in for 8 to 10 days.
Mm.
If you're using a weekly chart, you're in for 8 to 10 weeks.
Oh, interesting. Look at that.
If you're using a 10-minute chart, this is a 30-minute, but let's say if you're using a 10-minute chart,
Sure.
then you're in for,
An hour and a half.
yeah, an hour and a half. You're in for an hour and a half, and that's it.
Yeah.
So know what you are doing. Understand what you're what you want to be.
Yeah. Yeah.
And if you want to be a day trader and use 10-minute charts, then realize you're only going to be in for an hour and a half.
Exactly. I love that. Well,
You're not an investor. You're not a 8 to 10 week person if you're trading on 10-minute charts.
you're not Warren Buffett, whose intention is to hold forever when you're using 10-minute charts.
Yes, and actually on that point, let me show you something else that I found last week that I thought was really enlightening, and then I added it to my website, which is I had the daily and the weeklies here,
Mm-hmm.
but this is a monthly. So keep in mind that if you're doing monthlies, then it's
Mm-hmm.
8 to 10 months,
Right. Almost a
right,
year. Yep.
to be in it. But check this out. This is really interesting. This is the total market index.
Mm.
All right. And the arrows here are where the momentum goes below zero.
Oh, look at that. Yeah.
One there, one there, one there. Now this one right here was COVID.
Yeah.
So
That'll
this was
break a pattern.
well, this was well, it went below it. Even if you didn't, most people didn't know COVID was coming.
Right.
This is January. So it went below. Sure enough, it went down.
Yeah.
And then 2 years later, January of 22, right when the cyclical bear market began,
Yeah.
it went
Oh,
below
yeah.
zero.
Look at that.
This is a monthly, remember, so you have to wait till the end of the month for it to complete.
Yeah.
And this is where we are right now. Now we have
And
one
that's
more day left
mhm.
in the month, but not likely this is going to go back above
So
zero in
that's
just one.
March right there is what you're showing
This is
us.
March.
Got it.
Yes, that's March. So if you look at this and then you follow the ADX line down here, the easiest way to think about this is the green lines are the bulls and the
Mm-hmm.
red line is the bears.
Mm-hmm.
So this one here says there are fewer and fewer bulls, fewer
Right.
people being bullish, and there are more and more bears.
Yeah.
And where those cross is where you have more bulls than bears.
Okay.
Okay.
Yep.
So you can kind of follow this where it crossed zero there. This hadn't crossed yet, but it did shortly after that. This one right here had already crossed.
Yep.
Right now we haven't really quite crossed yet. So I'm going to paint a picture here for you, and I did this on my YouTube. So those that have watched that one, this is a little bit repetitive, but this is not going to paint a very good picture.
Okay.
All of these things. So this one in particular was really enlightening to me, and the reason that I put it on my website,
Yeah.
and mostly because this pattern, if you know how to go short, like those inverse ETF we just talked about,
Mm-hmm.
this only happens once every 2 or 3 years,
Yeah.
right? And it
Mm-hmm.
just happened this month. And when it does happen, it usually doesn't stop.
Right. That's the key I see with this. Yes.
Right. It continues to go down. So, that's one piece of data.
So just to kind of put it, one of the things I'm starting to see kind of macro level, and I've said this for real estate, but I'm now thinking it might be really for the economy. 2025 is going to be a shit year, to put it bluntly, but
Yes,
2026 could be a really good year.
could be.
Could be. Yeah, agreed.
It could be. There are some that say that this is the beginning of a depression-like
Yeah,
market
I've been
crash.
I've been hearing that for 10 years, but yes,
Yeah,
some people are
exactly.
saying that. Yes.
Right. Yeah. And some people are saying it again, and they're going to use this as an example. And I
Mhm.
said, why didn't you use 2022 as an example? I
Oh,
said,
they
here's,
did. Don't worry, they did.
yeah, they did, and it did, and it didn't. It actually went higher,
Yep.
and it's probably going to do the same thing, go higher again.
I
But,
remember this chart.
but
Yeah.
we have, probably till the end of the year to live through
Yeah.
this.
Yeah, it's
So
going to be painful.
this is the 2022. These are monthly also. This is the 2022. I think I've showed this before.
You did. This is a beautiful chart. I love the simplicity of this.
Yes, it's very simple. These two dark blue bars here, the market was making all-time highs. This was November and December of 21.
Hmm.
All right. And then this is January of 22. So it had already started. Even as the market was making new highs, momentum was declining. This is December and January when the market was making all new highs.
Yeah. So
And
let me ask you a question. Obviously, traders, folks like yourself, who are comfortable going out on the risk scale, will short, do double, triple, negative, or whatever
right,
they're called, ETFs,
right.
shorts, whatever. But
Yeah,
what if you're just an investor who is looking to deploy, buy, great companies at reasonable prices? And let's just say, for example, your current best guess is the rest of 25 is going to be tough, right? The 8 bars, to your point, right? We're in we're in March, so 8 bars puts us in December or January.
right,
When does somebody start nibbling? And obviously, as you've coached us for years now, you don't buy it all at once. You buy it in draws or tranches.
right.
Um, what, do we just sit in cash for a while? Do we get to the summer and kind of see where we are, or what do you think?
Yeah, that's a really good question. And I had that question this morning from this group in my community that I do on Saturdays. And, one of them, she said, all I do is buy the VTI, the total market index, because
Mm,
I can't figure out stocks. I don't know,
yeah.
what's a good stock, what's not. So I just buy the index.
Okay.
And so that's the one I showed you with the monthly. And I showed her
Yeah.
this, and she kind of freaked out. She goes, well, then I shouldn't keep buying it then, right? I said, well, I don't know. I can't tell you what you should
Yeah. You're
do.
you're not an analyst. Yeah. Exactly. Yeah.
I don't know what your time frame is. If you've got, she's probably easily got 20 or 30 years left.
Yeah.
Then, over time the market goes up. It will always go higher. If you're in an index, then you can
Yeah.
count on it going higher. If you're in a
Yeah. So
stock, that's
so let me ask you this question this way. So again, if your time horizon is multiple decades, and you have already been dollar cost averaging, meaning you've been buying, I don't know, I'm going to pick a number, $2,000 a month every month for the last 10 years.
right,
There's really no reason to stop that just because
right.
this chart says something. You just keep doing that. You buy a little more next month. You just
Yeah,
don't change your investing thesis. If your goal is 2,000 bucks a month of VTI and your horizon's 30 years, this doesn't matter. Is that fair?
right. Yes, that's fair. Unless you don't think you have more than 5 years to live, then you might want to change
Yeah,
that.
exactly. There's some point
Right.
where recency, right, changes,
Yeah,
but that should change anyway. Not this chart doesn't change that. If you're
correct.
right, there's, yeah. Okay.
And one simple way to do it is just do the rule of 100. Just take 100, subtract your age, and that's what you should be, aggressive versus
Mm.
defensive. So if you're 60 years old and 60% in equities and 40% in bonds,
Oh, I got it.
if you're 80, then or the other way around, rather, 40% in equities, 60% in bonds. If you're
Right.
80, then 80% bonds and 20%
Yeah.
equities. If
Yeah.
you're
It just is.
30
Yeah.
years old, then you can have 70% in equities and
Yeah.
30% in
Yeah. The,
bonds.
the key is to figure out, everybody's got to answer that individual question for yourself. How much time do you think you've got left and invest accordingly?
Right.
Yeah, I think that's wise advice.
Right. Now the indexes will go up over time. They're just
Correct.
designed to
They're
do that.
designed to do that. Yes.
And the reason is that, at some point they will look at everything. Like if you take the Dow, which has 30 stocks, they'll look at all the stocks and they'll say, well, these three are not performing.
Yeah. Kick them
So we're
out,
going to get
add
rid of
three
them
more.
and we're going to add in three that are overperformers, aggressive overperformers, new companies, new technologies, whatever, we'll add those in. And that's what makes the indexes go up. If you're in an individual, so they will always go up over time. If you're in an individual stock, though, depending on the stock, they might never go up,
Mm-hmm.
right? They could come down with the rest of the market and stay down and never come back. So that's why over the long haul, and even Warren Buffett says this, just buy an index ETF and just hang on to it.
Yep.
And over time, you'll make 9%. Some years you'll lose 20 and some years you'll gain 30 and over time you'll make 9%. So that's very, very simple way to do it over time. But if you're doing this like this person this morning, she goes, well, what do I do? It looks to me, all the evidence that you're giving me, looks to me like we're going to be going down for the foreseeable future. Mm-hmm. Then what should I do? Should I sell? Should I just stop buying? I said, well, I don't know. Depends on your time horizon. But if you don't want to deal with the pain, then you might want to just move to cash and wait for the bottom before you get back in again. Now, the big question is, how do you know when it's the bottom? And that's the thing that, financial advisors will always say. It's easy to get out when things are starting to look bad. It's really hard to get back in.
Right.
So you might miss the bottom and miss, a big chunk of your potential gains. Well, there are ways to know when the bottom is in, but the other thing too, just to go back to your question, is those good solid companies that pay good dividends, if they sell off, which they likely will with the rest of the market as it goes down, then the dividend yield will go up.
Exactly. Yep.
You'll actually be buying stocks at a discount at a higher dividend yield
and getting paid to hold it. Yep.
And getting paid to hold it. And this is basically what Warren Buffett does. Mm-hmm. And then as the stocks start to go higher, coming out of the other side, the dividend that you'll gain on the stock, the dividend yield will go down. So new buyers, as they enter in at higher prices, will have a lower dividend yield than you do. Mm-hmm. So your yield you'll still maintain that even as the stock goes up. So you'll be making the dividend and you'll be making the gain on the stock too. So the best point to buy those quality names is always near the bottom. But how do you know when it's the bottom? Well, you don't. Nobody does.
Yeah.
But one thing that I track, and we'll continue to watch this right now, especially since we probably are going to be continuing to go down, is my bottom finder chart.
Yep, I remember.
And this basically shows the percentage of stocks above their 20-day, 50-day, and 200-day moving average. And what you should notice, this is another point that probably people won't like because it's not going to be pretty. Notice that the percentage above the 20-day went down to 10. That's my threshold for when we're getting close to a bottom. When only 10% of the NASDAQ 100, that means 10 stocks out of 100 are above their 20-day. And when only 20 out of 100 are above their 50-day, it never got there. And on the 200, only 30 out of the 200 is not even on the chart because it never got that low.
Got it.
So none of these have gone that low. None of these, other than this one just briefly, none of these have really got to the point where they're saying that could be the bottom. So I don't think the bottom is in. I think we have still quite a ways to go before that happens.
Now, what does quite a ways to go mean? Are we talking? I know it's just a wild ass guess, but you think 20% top to bottom, and we're 9% the way there is very possible?
Yes, I think that's very possible. Could be more.
Yeah, I was going to try to step up the ladder and see where you hesitate. How about 25?
Well, let's go look at the chart before I commit to that. But before I get off of this one, the other thing that I'm looking at is the put call ratio, which tells you, bulls to bears basically. the number of puts being purchased versus the number of calls. And you can see that when it gets near a bottom, this is way up here above 75%. We're not close to that yet.
Mm-hmm.
There are still too many people positive thinking that the market is going to go higher.
Got it.
Now, this is a 5-day moving average. So with this big sell-off right here, this might take a couple of days for this to actually keep going. But we're still pretty far away from 75, this point right here. So that I am not going to be comfortable saying that we might be turning around until it gets way up there.
Yeah, you've got to get to the extremes, right? That's
Yes,
something.
you got to get to the point of people are just tired, they want out, they sell everything and say, I don't ever want to get back in the stock
I don't want to
market
touch stocks ever again. Yeah.
again. Right. Now, let's look at so it's 6100, let's say it was a little higher. 6140 was the top.
Yep.
So 6140 times 0.75 is 4600. That would be
Way
lower
below that.
lower than this bottom over here.
And that bottom was 22.
Yeah, let's go back 2 years. Let's go back 3 years. Right here.
Okay, so 4,600.
That's 30, basically 3,500 right there was the bottom that coming out of the 2022 bear market.
Mm-hmm.
That was the bottom. So
no, I'm just curious because you got that calculator there. How far what would the collapse be? What is that? What did we say? 6,100 to call it. Let's call it 3,600. That's 2,500 points. That's like 40%.
6,100 to what?
3,600.
3,600. 2,500 points.
Yeah.
Yeah. That's about 40%.
Yeah, 40%. Okay.
I don't think it's going to go 40%. So I think it could easily go to here. This will be major support right there. That's about 4,600. That's exactly what we said. That's 25% right there.
So that's kind of your, I'll call it low bar. I mean,
that's where it could get by the end of the year.
And again, this is not the end of this week. It's not Monday. It's the end of
Right.
2025.
Yeah,
we could basically grind lower.
And it's going to go like this. It'll go down. It'll go up. It'll go down lower. It'll put in a lower high, and then a lower low, and then a lower high, and then a lower low, and then
It'll
a lower
just
high.
grind lower.
Right. It'll keep doing that. That's the hallmark of a downtrend or a bear market. Lower lows and lower highs, and we've only made one of each of those right now so far. So we're in the early innings of this bear market. So I think that it will continue to go down. Now, somebody asked me today, what do you think would make it go up? What would all of a sudden have all of this turn around and just start to scream higher? Well, I think one thing that could do that, even though it could be temporary, is the end of the Ukraine war. Could do that if you
peace. Yeah, I could see that having
if you hear news that they're going to finally sign a peace settlement, then that's going to have the market screaming higher. So the question then is, when will that happen? So let's say we get down here and make a lower low, and then we get that kind of news. Will it be enough to push us up to a higher high instead of a lower high?
Yeah,
that's what I would be watching.
The thing that I think would, again, I'm not calling for this. I'm just trying to figure out the riddle or the answer to your riddle. The one thing coming out of left field that would send this higher, at least in a very brief window, is an emergency rate cut by the Fed, 50 basis point emergency rate cut.
Right.
That would send the market higher, but also probably impact inflation.
I think an emergency rate cut by the Fed will send the market lower.
So you think that coming out of nowhere would be kind of a negative signal? Like
I think it would be a huge negative signal.
Okay.
If they'd had an emergency rate cut. So let's explore that a little bit.
Okay.
Let's go back over here because we've talked about this before. May 7th, I think, is going to be a really important Fed meeting.
Agreed.
Could be one of the most important of the year. The one in June might be even more important.
Yeah, it's
But
as we talked about. I think it's the June one.
yeah, but
Yeah.
let's explore that. So
Uh-huh.
we've got this one coming up. This is the jobs number coming up next Friday.
Yep.
Right now we tick from 4 to 4-1.
Mm-hmm.
4 to 4-1. We actually have fewer claims than we had last time.
Yep.
So far, we got one more week that has to go in here, but I don't think it's going
It'll
to
be
move too
meaningfully
much.
different. Yeah.
So I think we're going to stay flat, probably.
Okay. So 4-1
Probably
again.
stay at 4-1 for the jobs number.
Okay.
That's what I think the Fed is watching to see whether they do a cut.
Hmm.
I think, and they've already said that they're expecting 4-4 for this year.
Correct.
So they need to see it not only go above 4-4, but accelerating.
It's the speed. Yes.
Yeah, it's the speed that will cause them to cut.
Correct.
So if this were to go from 4-1 to 4-6,
Mm-hmm.
that could be an emergency rate cut.
Well, let me ask you this. This is something I had a conversation with Claudia Salm about, let's call it 3 months ago. One of the things that I'm, telling my audience is, yeah, the monthly number comes out, first week of the new month, first Friday of the new month, most months. But I think we should just watch the weekly claims, right? The weekly claims have been
Yeah,
remarkably anchored around 225.
yeah,
There have been a
yeah,
couple of weeks over the last 6 months where it popped to 240 and 250, but it came
yeah.
right back down.
Right.
If we start seeing a run up to 240 and then 260, 280, anything north of 300 is like red flag, red flag.
Yes.
Okay.
Yeah. And in fact, probably anything up above 260, which is where these peaks are up here,
Okay.
will probably be a red flag. And
We'll get the
then
Fed's attention. Yeah. Okay.
we should also look at the initial claims versus ongoing claims.
Yeah, that's the big one. The continuing claims. So that's when economists look back at 2025, Dan, I think the one thing they're going to be shocked by is the unemployment rate never went crazy, but
Mm-hmm.
continuing claims jumped off the page. It's going to be a
Right.
duration based problem.
Yes. Now, I think I might actually put a line in here to make this even more clear, but the red one in the background is continuing claims, and the blue one is initial claims, which is basically the chart I just showed a minute ago.
Yep.
That it hadn't really jumped up that much this month. But you can see continuing claims is just staying,
Remarkably flat.
it's staying there. It's not coming down.
True. But it's also not accelerating, right? We've been
But
at
it's not
1.8
accelerating. Yes.
roughly, I don't know, call it a year, 9
Right.
months maybe.
But it still would be concerning to me to even have initial claims come down and have continuing claims stay there.
No, that's exactly my point. That is exactly my point. Is if the red bars, even if the blue, I don't know, is that blue, purple, whatever that is,
Yeah.
don't jump, but continuing claims goes from 188 to 191 to 194 to 19. That's the real problem, because we're going to
Yes.
have people on unemployment for 26 weeks and 39 weeks, and
Right.
that's what I think is coming, and it's very much my memory of the early 80s, being a
Right.
kid and watching my old man be out of work for 11 months.
Right.
It's
Yes.
a duration problem.
And continuing claims eventually run out.
Yes, exactly.
So, if that happens, or people start getting laid off, and you know that
Here's a question for you that you probably don't know, because I've never had to look at this either. I'm wondering when the federal layoffs start showing up in the numbers.
yeah, somebody asked me that this morning too, and they I think they will start to show up. They may start showing up next week. I mean next month. I'm sorry, next month.
Okay, so
So
not
we might.
necessarily, so not this month, not the one on
It will
Friday.
not be this month. It will not be next week. It will not be next Friday's
It'll
report,
be the one after that. Okay.
but it could be. It could start to move higher in the following one. All right. So let's look at this. Let's stay on the Fed meeting
Mhm.
in May 7th,
Yep.
and think about what they're going to be looking at. So this will be in April.
Mhm.
We'll have this one next week, actually. And based on that, they have no reason to cut.
No, no reason to cut. No.
It's really not going to
Inflation's
move.
higher, unemployment's
Right.
flat, no
It's
reason to
it's
cut.
lower than their projection for the year.
Mhm.
So all that looks okay.
Correct.
So now let's look at inflation and headline CPI first.
Sure.
And what you'll see, and of course, last month the forecast was 2.9 and came in at 2.8, so it was lower.
Mhm.
And we have a fairly large one, almost the same size that dropped off last month.
Mhm.
That's going to drop off in the next one. Now, this one will be the week following the jobs number.
Right.
So May the 10th is when this comes
April.
out.
April the 10th.
I mean, I'm sorry, April 10th. April the 10th is when this comes out.
Mhm.
So this will be one before the next Fed meeting. So it looks like there's a big one dropping right there. So at worst case, it should just be flat, maybe. It
Yeah.
might even go down a little bit more.
Yeah, but this we got to remember goes back to the Fed's favorite gauge, PCE core. Both
Yes,
CPI and PPI, all four metrics were better than expected last month. But guess what? The one that matters freaking wasn't.
it was higher.
PCE core
Right.
by a lot, by 0.2.
Yep. So let's look at the next thing I like to look at, which is commodities. And so this
Dr.
is
Copper is ripping higher.
copper. Yeah, and that's really interesting because copper usually goes higher when the economy is doing well.
Yeah.
So not sure what that's trying to tell us.
Oil, gasoline,
Yeah,
pretty
oil,
much.
gasoline. So the one in April is going to be, let's see, let's move this over
Yeah.
before March, before that period right there.
I would say net higher.
Yes, they're all higher, right? So
Yeah.
oil, well, actually, oil actually came down during March and then back up again.
Yeah, they're going to measure it in the middle somewhere. Yeah.
Right. They're going to measure it from the beginning,
Mhm.
which is roughly flat. Gasoline was a little bit higher. All of these, if you look at it from the beginning and ignore this downtrend right here because it's in the middle
Yeah.
of the month.
Yeah, all X copper. Yeah.
Yeah, they're except for copper, right? They're all pretty much flat for the month.
Okay.
So I think we probably will get a flat CPI,
Mhm.
which again won't be a big concern
Yeah, which
for the
is not
Fed.
enough for
I
the
mean,
Fed to cut. They're not going to
it's
cut
not
with a
enough for them
flat.
to cut, and it's not enough for them to raise. I don't think they'll do anything
Yeah.
in in the May
Yeah.
in the May 7th meeting. There's going to be one more employment number which might start ticking higher, which is the only reason they might potentially cut in May, but I don't think it'll be enough.
It won't be enough.
I don't think
There
I don't think they'll cut in May.
can't be enough. It's June. June is the critical month.
Right. Yeah. Now
Yeah.
June is going to be they're going to be in a real quandary. They're going to have a real challenge in June
Yeah,
because
because
then
again, if
all
you go
those
back to
all those
CPI,
not only CPI but all those layoffs will start hitting too.
yeah, that's going to be the problem is you could be in an environment in July, August, and September, if you go back to your inflation chart, where the base effect
Yeah, right here.
just makes CPI look. So you could be in a stagflation. The summer could be stagflation. Inflation
Yes.
higher, unemployment higher. Now,
Right.
Fed, what the hell are you going to do?
Right. Yes, exactly. What are they going to do? Which one are they going to choose?
Well, that's worth
Which of their
that's
favorite children are they going to? It's like Sophie's Choice.
yeah. So it's funny. I asked Taylor this, who's a 12-year vet on Wall Street, and he was pretty adamant. Almost immediately responded, "The Fed goes to zero," and
Hmm.
I disagreed vehemently.
No, no,
My
they won't.
yeah,
They will not go to zero.
yeah. I certainly hope not. Uh,
They will not go to
the
zero.
the lowest
They might never go to zero again.
that would be my hope. That is my hope. But apparently, Wall Street veterans are saying the Fed's just going to go back to their old tricks, go back to zero, print, print, print. I don't know.
No, that is more of a hope than an analysis.
Yeah, in fairness, it was a 10, I gave him 10 seconds to think about it.
Right.
But yeah, it's this is a this the summer. This is why June, July, August is going to be just could be brutal on the Fed. Rising unemployment, rising inflation,
So
a
here's zero.
contracting economy.
Here's zero rates down here.
Yep.
The blue is 30-year mortgages, and the pink is 10-year yield.
Yeah.
It's not actually zero, but
Yeah, it was slightly
and
above. Yeah.
this gray one back here is the Fed rate. So this is the Fed rate hike, which is like below 2.
Yeah.
And briefly, for some brief periods, it was pretty much zero
Yeah. It's
after COVID. But
think about it. Let me paint a picture for you. It's August 1st. Unemployment is now 5.2. GDP has been negative for Q1 and Q2, looking to be negative for Q3 because we're in August. Um, and inflation is higher. Let's put CPI, just because that's what we were talking about, at 3.2. What's the Fed do? All metrics are worse.
well, they will have to cut at that point.
Inflation be damned.
Yeah, they won't go to zero. It
What do you
won't be
think the
zero.
lower bound is? Because I told Taylor what I thought the lower bound was, and I'll share it with you, but I don't want to sway the
I
witness. What do you
think
think the lower bound is?
probably, let's see here. So this is the mortgage rates over here. I think this is the 10-year over here. I would say the Fed rate, actually, let me look at, I think I have a Fed rate chart with recessions. So here's where the Fed was, way down here, almost zero.
Mm-hmm.
So I would say here's after the 2001 crash. And then this is the financial crisis. I would say probably down in this range,
So one.
1 to 1.5, somewhere down there.
Yeah. Again, without this chart, without really even thinking about it, I said, dude, I hope the low's two.
Yeah.
Because we gotta stop being addicted to zero.
Yes. And absolutely. I mean, I think 2 would be reasonable right there.
Yeah. Yeah. So somewhere between 1.5 and two. We just
Yeah.
can't. We got to stop going to zero.
Yeah. Well, they won't go to zero. I do not think they will go to if they go to zero, we're in a depression like scenario.
Got
And
it.
all those people that said that the market's going to crash 80% will be right.
Okay. Oh shit. All right. So let me get this right. If you want 0% interest rates, hope for an 80% stock market crash. Be careful
Yes.
what you wish for, folks.
Yeah, they will go hand in hand.
Wow. Okay. Well, let's hope we don't go there.
Yeah, I don't think we'll go there. 2, I think 2 probably is reasonable.
Yeah. That was my out of nowhere guess.
Right.
Okay.
But I again, we're in a secular bull market. I still think that if we go into a recession, it's going to be short and shallow.
Well, it's I don't know if you saw this, but GDP now has even with the gold adjustment taking Q1 negative. It's now negative 0.5. So Q1 could be the first negative quarter.
Well, they were a lot higher than that before.
Well,
They
yeah.
were
So
like they were like negative 1.8
well, no,
before.
they're actually. So again, you got to be careful with GDP now because they had an update about 2 weeks
Yeah,
ago. They're
right,
still very negative. I think they're 2.8, but they had to do some adjustments for the trade in gold,
right.
right? So they now say X the gold trade. So it's now negative for the first time X the gold difference, which I
Right.
don't understand, but it was important enough for them to make that adjustment. So I'm gonna call it important.
Yeah, I mean, it wouldn't surprise me to see a negative GDP and probably a negative in Q2 as well.
Bingo, bingo, bango, recession.
Should be officially a recession, and
Right.
then I don't think it will. I think it will be short and shallow. And somebody actually on your channel said, "What do I mean by short and shallow?"
Yep.
Well, average recession is 10 months,
Hmm.
so something less than that.
Yeah. If average is 10, short and shallow means less. Yeah. No, I agree. I agree. Yeah. So as we get ready for Monday, because this will go live 4 p.m. on Sunday, like all your other videos. It's get your popcorn ready. Be careful. Is that what the message is?
Be careful. I'd follow the people on CNBC and sit on your hands. Wait for Liberation Day.
Yeah. Yeah. It's Wednesday,
See
so
if we're
just
liberated.
see what
What do you
happens.
think? What do you think will happen? Do you think he'll rescind them? Do you think he'll delay them, postpone them?
No, I really believe, and again, it's funny. I listened to the All In podcast,
Hmm.
and on the All In podcast that just came out this morning, they played a clip from President Donald Trump from 1987
Hmm.
talking about these trade imbalances.
Right.
So I believe he believes to his core that this is, you know, our gargantuan problem and it's unfair. So I do not think there is a chance in hell he's going to waive them. I think this is just something he believes concretely. So
Yeah.
we will have tariffs. There will be some negotiation, but I think he has to pick industries that he thinks are national security. And I read an article the other day that picked three industries. And I'm not smart enough to figure out if these are the right three, but they sound good to me: steel, aluminum, and pharmaceuticals.
Hmm.
So if I had my guess, I would expect for nasty tariffs on steel, aluminum, and pharmaceuticals. Why? Because he wants that stuff made at home. He
Right.
wants people to invest in factories and make that stuff here. So he's going to make it prohibitively expensive for those other things. That's my wild ass guess.
Well, Hyundai has already announced that they're going to build a steel plant in Louisiana.
I saw that. Yeah, I saw that.
So it may have already started. What about autos?
So I think autos is actually going to be a game of tit for tat. So, for example, most countries have higher tariffs on our goods than theirs. So there's
Hmm.
two ways this can go. We could raise our tariffs, or they could lower theirs.
Hmm. Right.
So if the other country lowers theirs, net good. We're all fine.
Right.
We're all fine and dandy. So I think the auto tariffs is a lot more about um, truly fairer trade. I don't think he's afraid to go 25, 50% if the country's, if they're being unreasonable. But I
Yeah,
also think,
and by unreasonable you mean increasing their tariffs?
yeah, I mean, like, for example, I'm just going to make up numbers. Country X has a 50% tariff on US cars, and we have a 5% tariff on theirs.
Right. Hmm.
If we take our tariff from 5% to 25%, again, remembering they have a 50, but then they go reciprocal and they take their 50 to 100, oh, he's going
Right.
to go batshit crazy.
Yeah.
He's going to go
Well, he's already
bananas.
said that the reciprocal tariffs will result in cumulative
Oh,
reciprocal.
it'll be you want to see the man lose his shit? Somebody do that. He will go.
So
He can.
he I don't know if you've heard it, but he announced that he's looking at offering um, tax credit
I saw that. Nice.
on U.S. made automobiles.
Interest on U.S. made automobiles. Yes,
Right. Yeah. The
just
interest, if you can take out a loan to buy it, then you can deduct the interest.
on a U.S. made car. Yep, I
Right.
saw that.
Which, I mean, I think that's brilliant. That should make
Yeah,
foreign auto companies. That doesn't mean they can't sell their cars here. They just have to build them here.
yeah. No, I think it's a genius idea. He can't do that himself. He'll need Congress to
Right. Right.
support that. But I when I heard that, I'm like, that's a great idea. Because
Yeah.
again, that'll incentivize people to buy U.S. cars. I mean, I haven't done the math, but just looking at blended tax rates, that's probably like for the average person. Let's assume an average person's $800 a month, so that's 96. That'd probably save them 3-4 grand.
Yeah.
You know, yeah,
Right.
it makes sense.
And 3 or 4 grand that they didn't have before.
Exactly. Exactly. It will. You know what that
But
would do? That will absolutely make people buy more U.S. cars. Like people at the
yes,
margin. right? The rich people don't care,
Right.
but the the masses, call it 80%. I think that impacts buying decisions. I really do.
Yeah, I mean, I know people personally that bought electric vehicles because of the rebate that
Oh,
they could
for
get.
sure. Oh yeah,
And I think it would have,
7,500 or 10 grand or whatever it was.
yeah, be the same effect, I think.
Oh, it would be game changing. No,
Yeah.
there's no question.
So again, it doesn't mean they can't buy foreign cars.
Yeah.
And it doesn't mean foreign automakers can't sell here.
Well, did you see
But
what Ferrari did? I mean, just for example,
no,
Ferrari cars 100% made in Italy. What Ferrari
right.
said is great. We'll just raise our prices 10%. No big deal. I mean, that's their choice, right?
Well, but think of their clientele too.
No, I'm just giving
You
you
know,
an example, right?
yeah, they don't care. Their
Yeah.
clientele doesn't care.
No.
Instead of paying, 300,000, they'll pay 330,000 for a car.
Exactly. Exactly. Yeah. That's pretty crazy.
But for the ordinary person, having your Toyota made
Mm-hmm.
in Indiana
Yep.
might make a difference if you can deduct your interest.
No, I really believe it would be game changing if people would be shopping for American made cars. Even if they
Right,
have a foreign label, they would be shopping for American made cars.
right. Which then does what? You'd end up with more factories in America. End up with more jobs,
Yep.
right? So,
Yeah, that's the game. That's the game he's playing. I really do believe he wants to move the needle on the middle class. He wants to stop the deterioration.
right.
Unfortunately, it's a timing problem, right? You get a lot of the pain early, right?
Yeah, that's
We
right.
talked earlier about a negative Q1, probably a negative Q2. You're not going to see any of the benefits until probably 26 or 27.
Right,
It's just a timing problem.
right. That's right. That's true. So just, just a matter of whether the general public will understand this or not.
Don't ask me about the general public, but that's okay. Do me a favor. Where can people follow you? Again, you do these things Monday through Friday that more people need to check out. What do they do?
Well, you go to breakpointtrading.net. You can go to my website, and the YouTube channel button is right there on the top. It's the easiest way to do it. It's even easier than having the link or trying to post the link. Just go to breakpointtrading.net and click on the YouTube channel right there. And then when you get there, subscribe. Even before you watch anything,
Yep.
just subscribe. Or just subscribe and leave if you want to. No,
How many? Oh, I
I'm
show
just
the
kidding.
YouTube channel so people know what it looks like when they click on it,
Uh,
so they know they found you.
there you go.
There you go. Look at that.
1.06.
Nice work, my friend. 1,000 subs. Congratulations. I'm so proud of you.
So this was Fridays. So I do this every day, and I usually start off just with a market recap. I go through the dashboard. You can see right here.
Yep.
There's the Dow down 700 points. These are the sectors. The three most aggressive sectors are at the bottom. This is just Friday, but take a look over here. This is the in
Woo.
each of these sectors. In each of the sectors in this column, it's just alphabetical.
Mhm.
But it shows you the number of declining shares, percentage of declining shares in each of the sectors,
Wow.
right?
Ouch.
So it's all red except for utilities is the only one that was positive.
That's crazy.
So that's an ugly day when
That's
that
an ugly
happens.
day.
There's Lululemon too. I've got the earnings from the past week. So
Yeah.
Lulu's right on there.
Very cool.
Cintas and Paychecks last week.
Nice.
So I start off doing that, and then I will branch into some other topic that I want to cover. And people can ask me about certain stocks. They can post symbols right on the YouTube channel, and
Yeah.
I will make as much effort as I can to review the charts for each of those symbols and give my opinion on what
That's
it looks
awesome.
like. And some people ask me about more esoteric things like what do you think about the U.S. dollar? What's that going to do? So I can show the chart of that and what that's looking like. And it usually I'm trying to keep it less than 30 minutes.
Mm.
Fridays was longer because Friday is when I update everything. So I went through and showed basically the things I showed you about those monthly charts and what those monthly charts are saying for an extended downtrend.
Mhm.
So Friday's a little bit longer usually, but I'm trying to keep it under 30 minutes.
Very cool, Dan. I'm so proud of you. Thank you for creating that channel. It's a long time coming and already over 1,000 subs. That's great.
Yeah, I
Talk
had
next week.
one guy post said, I started watching you in beginning of second week of February. I went to cash because of what you were showing me. And so far you've saved me $40,000.
I like that. I like that.
So yeah, I like hearing those kind of stories.
There you go. Thanks, buddy.
All right. Talk to you later.